You're scrolling listings at midnight, half awake, half stressed. Every house that doesn't look like it's falling apart costs $500,000. Beige carpets, outdated kitchens, fake wood panels, and somehow it's labeled a starter home. You're doing mental math, wondering if you're behind in life or if the entire market has lost touch with reality. Here's the truth, it's not you. It's the math, and today, we're breaking it down. My name is John. In this video, we're calculating who can actually afford a $500,000 house in 2026. Not who gets approved, but who can live comfortably after signing the papers. Qualifying for a mortgage and sleeping peacefully at night? Those are two very different things. Let's start with reality. In many markets today, $500,000 isn't luxury, it's baseline. A modest home, average neighborhood, nothing extravagant. Yet the median household income sits around $84,000. That means homes cost about 6 times what people earn annually. If that sounds off, it's because it is. But the system keeps telling you it's doable. Banks approve you. Agents reassure you. Social media makes it look easy. The problem? Affordable has been redefined and not in your favor. Let's talk down payments. Traditionally, you'd put 20% down, that's $100,000, on a $500,000 home. But the average savings? Around $8,000. That's not a gap, it's a canyon. Even if you save aggressively, say 10% of your income, it could take over a decade to reach that goal. And by then, prices likely rise again. So most people go lower 5% or 10% down. Sounds easier, right? Not quite. That introduces PMI, private mortgage insurance. An extra $200, $400 per month. For insurance that protects the bank, not you. Already, you're paying a penalty for not being wealthy enough upfront. Now let's calculate the actual monthly cost. With a $450,000 loan at current rates, your mortgage alone lands around $2,800. Insurance, maintenance, and PMI, and suddenly you're at roughly $4,300 per month. That's before anything breaks, before emergencies, before life happens. Financial guidelines suggest spending no more than 28% of your income on housing. To safely afford $4,300 monthly, you'd need to earn about $180,000 a year. Even using a looser standard, you still need around $150,000. And here's the reality check. Most households don't make that. So who is buying these homes? Some have dual high incomes. Some have family support. And many? They're stretching themselves thin, one unexpected expense away from financial stress. Let's make this real. Imagine a household earning $160,000 a year. Sounds comfortable, right? After taxes, they're bringing home about $9,500 per month. Subtract housing costs, and they're left with around $5,100. Now add real-life cars, insurance, groceries, utilities, loans, and suddenly, there's barely anything left. Maybe $1,500. Before savings, emergencies, or even basic enjoyment. They're spending nearly half their take-home pay on housing. That's not financial freedom, that's pressure. And it feels like it too, constant budgeting, delayed repairs. Anxiety over every unexpected bill. Living in a home you technically own but can't comfortably afford. This is what house poor looks like. Now imagine households earning less $120,000, $100,000, or the median $84,000. At that level, a $500,000 home isn't tight. It's unrealistic. But here's the dangerous part. The system doesn't stop you. Banks approve loans based on risk, not comfort. Agents earn commissions from sales. Sellers price based on comps. Nobody in that chain is responsible for your long-term financial well-being. Once you buy, you're locked in. And if things go wrong, job loss, medical bills, repairs, you don't just walk away. You carry the consequences. That's why this isn't just about numbers, it's about lifestyle. Owning a home should improve your life, not trap you in stress. Yet many people normalize struggle, convincing themselves it's part of the journey. It's not, it's a warning sign, so what should you do? Start by ignoring what you're approved for and focus on what you can truly afford. A number that allows you to pay your bills, handle emergencies, invest for the future, and still enjoy your life. Maybe that means buying less house. Maybe it means renting longer. Maybe it means waiting, and that's okay. Because there's no reward for being house poor, no trophy for financial stress. Real wealth isn't about owning property, it's about having freedom, stability, and peace of mind. If the numbers don't work, walk away. That's not failure. That's intelligence. Look, I'm not saying give up on homeownership forever. I'm saying stop forcing a deal that doesn't make sense right now. Markets change, incomes grow, opportunities shift. But a bad financial decision today? That can follow you for years. So run your numbers honestly, ignore the noise, and make decisions based on reality, not pressure. Because the smartest move you can make is refusing to play a game that's stacked against you. If this gave you clarity, subscribe for more real-world financial breakdowns, and remember, the goal isn't just to own assets. It's to build a life you can actually enjoy.